So Cathie Wood of ARK Invest recently just sold a tremendous amount of shares of Tesla. In fact, if we actually take a look and add up all the amounts of shares for Tesla she sold, and then you get the math for the average price in which Tesla was trading on 6/12/2023, it comes close to nearly about $100 million worth of Tesla that she recently sold. And now when we look closely, we see that she actually picked up a bunch of shares of Meta. Now, of course, hearing this, you're kind of like, what the heck, Cathie? Why are you doing this? But however, when you look at things a little bit deeper, it makes a little bit more sense why Cathie Wood did this. And I want to go ahead and explain why. Even though she's still very bullish on Tesla, I want to go ahead and break down the most probable reason and why she did this. Now, again, I'm not speaking face to face with Cathie, although I would love to have her on the channel. You know, I obviously am not having conversations with her, but one could only assume the main reasons why she's, obviously sold a ton of Tesla. Now, when we take a look at Meta, we see that Meta actually ran up year to date more than Tesla. So again, you're kind of thinking to yourself, well, why would she buy Meta? It just doesn't make sense. It's expected more for a pullback than Tesla is, especially at the amount that it's recently ran up. And when you take a look at Tesla, we still see Tesla actually trending up even after she sold. In fact, what's also interesting is although she sold nearly $100 million worth of Tesla, we don't see that much of a impact on Tesla stock. See, it's not like when someone sells billions, right? It's completely different. So it's not like she's tanking Tesla. We still see Tesla actually moving upwards. Now, when we take a look into the holdings of Cathie Wood's flagship ETF ARK, we see that Tesla is still the #1 holding. In fact, I also circled that its weight in this, ETF is still above 10%. It's at 11.86% as of the 13th of this month, right? And so, it's not that Cathie Wood isn't bullish on Tesla anymore. Now, it's most likely because of this, right? So basically, fund managers, right, especially fund managers that, actively manage ETFs, traditionally, they don't want to have positions exceed over 10%. Now, this is not a manual, a rule book that has to be adhered to by every fund manager. Of course, every manager is going to operate differently. However, generally you don't want to exceed over 10%. Now, looking back into the holdings for ARK Invest, we see that, Tesla's actually above 10%. Now, why is it above 10%? Well, obviously, Tesla has ran up a tremendous amount this year, right? I mean, if we look at the year to date, if someone would have just bought Tesla in the beginning of the year and held up to now, it's well over 100%. And we see that Cathie Wood doesn't really have a lot of exposure to Meta, right, in this flagship ETF. And so it's basically just a story of Cathie Wood trimming down some of the shares that she has in Tesla to kind of bring it down closer to that 10%. Again, it's not a rule that fund managers have to follow. It's just typically what they do. And so she's kind of just shaving off a little bit of the exposure that she has to Tesla now that's way above the 10% threshold. And then and even after selling that much, it's still above the 10% threshold. It's at 11%, and kind of just getting more exposure to Tesla. Right? So that was very interesting. However, I want to go ahead and talk about what's currently going on with Tesla and really just approach it from two different perspectives. One from the perspective of a long-term investor, but also from the perspective of a short-term trader, right? I want to cover some, catalyst events that are coming in the near future that, of course, if you have exposure to Tesla or you trade Tesla, you're going to want to pay attention to. So make sure to watch this video in its entirety. Now, if you've been watching my previous videos, I mentioned how we're at an area where there's very little volume by price. Now, I say this a tremendous amounts of times on this channel, right? Volume by price is different from your traditional volume by time. And so when we have very little volume in price, that's when we have the most, volatility in the stock either moving upwards or moving downwards, right? There's little exchange between the bid and the ask, and so when there's a lot of buying pressure, it bids up, the order book, and a stock will go up higher, and vice versa. When a stock is trending down, it'll go ahead and bid down the books, and the stock will trend downwards. However, I mentioned in a previous video, by the way, guys, if you're not subscribed to the channel, make sure to hit that subscribe button right now. But I want to go ahead and bring this back to the chart and explain something. So we're seeing that Tesla was trending upwards and we were approaching this area where there's little volume by price. So in recent videos, I've been saying, hey, we're possibly going to see Tesla actually run up a little bit more as there's little volume by price here, right? When there's a lot of volume by price, we see, that's when supports and resistances come. That's when we see sideways movement and consolidation. But we're kind of in this area where there's a lot of space to run. However, this brings me to the point of right now and something that we absolutely had to cover, which is the FOMC federal rate decision that is coming tomorrow. Now, I do want to, emphasize something for you guys. Now, I know lots of times I say something, especially if you guys have been following me with Tesla, or if you're part of the Push and Profit private group, I say something and it ends up happening. But guys, I want to give a disclosure. So I see people kind of make jokes like, oh, with the crystal ball, it's all fun and games. But I do want to do a reminder that no matter what I say, I'm not going to be 100% right all the time. I'm, often very correct simply because, a lot of the people that you may watch on YouTube or you may follow on other platforms, they're very myopic. And the reason I say this is because they typically look at one data point, right? You'll have some individuals that only look at fundamental analysis. You have some individuals that maybe only look at technical analysis versus me. I'm looking at fundamental analysis, alternative data. I'm looking at technical analysis, macroeconomic events that are coming, catalyst news. I also pay attention to monetary policy and fiscal policy, right? And the reason why I look at all these several, different data points is because it provides a holistic view of what's happening in the market, right? And not saying that, obviously I'm better than anyone else that's looking at one data point, but just statistically speaking, when you have more data, your hypothesis of the market is going to be most likely a little bit more accurate. But again, I'm not going to be right all the time, right? And so the reason I am saying this is because I don't want people just, buying into Tesla for their long-term investments or trading just only because I say something, right? You have to see value in it yourself. However, I want to talk about an event that's happening tomorrow and my thoughts on it. Now, tomorrow at 2 p.m., we had the Fed decision on interest rates and monetary policy. And this meeting has been one of the most speculated ones so far this year. See, in the past, we've heard, individuals saying, well, they're going to hike or they're going to pause. But, we've had more certainty that they were going to hike. However, this is the first meeting where, it's been a little bit of a battle between whether the Fed is, going to pause or whether they're going to hike. There's, mixed, opinions on this. There's a lot of speculation on this meeting. And so this is why this meeting is probably one of the most important ones, because it could honestly take the market by surprise. And of course, the market doesn't like surprises, right? And now at 2:30, afterwards, we also have Papa Jerome Powell also hold a press conference. Now, if you're part of the Push and Profit private group, then you already know what my thoughts are for tomorrow. However, I'm going to go ahead and publicly say this on YouTube. Now, I want to go ahead and show you guys this chart where it shows all the rate changes that has happened in the last year. Now, the reason why this is important, right, is because typically it takes about 12, maybe 15 months until the economy actually feels the impact of, an increase or decrease in monetary policies, right? And whatever the decision for the rates are, right? And so if we actually, look back for 1 year, we see that so far in 1 year, we truly only have experienced two, Fed increases, right? The 25 basis points that happened in March 17th, and then the 50 basis point that happened in May 5th, right? So far 75 basis points. Now, the Fed has already hiked an entire 5%. So the economy, we typically only feel things 12 months after, has really only felt 75 basis points, which is only 15% of the entire 5% hike that we actually had. Now, in the Push and Profit private group, I mentioned that, tomorrow, I, strongly believe that we're probably going to see a pause. Now, again, as I mentioned earlier, I'm not going to be right every single time. So if you're watching this video after the decision has already been made, well, maybe I'm just wrong. But the reason I'm saying this now, right, is simply because, I like to use the analogy of a pie, right? When you go ahead to, and I know it sounds silly, but you're going to have to bear with me, but when you go ahead and try to bake a pie, right, there's two factors that really determine, how that pie is baked. And that is heat, increasing the temperature, and honestly, the time, right? And so, you can't just increase the heat to really cook the pie faster, because if you just increase the heat thinking it's going to cook the pie faster, you end up burning the pie. And so the Federal Reserve doesn't want to burn the economy, right? They just want to stifle it enough so that we cool down inflation, yet we don't actually have, a calamity in the economy, right? We have already seen, regional banks kind of collapse. Two of them fail. from only just feeling 75 basis points. So we have a lot more to feel. And so this is why, I had the belief that the Fed is going to pause, and we're not going to see the Fed actually turn up the temperature and kind of just leave the pie to bake a little bit more for more time, right? Now, also, if you're part of the Push and Profit private group, you also heard me mention how there's been, multiple Fed or former Fed members who've, also predicted that they're mostly going to pause now, but that doesn't rule out the fact that they could go ahead and hike later on. For example, we've seen, like other, countries and their, monetary policies, pause and then hike again. And so, it's very possible that the, Federal Reserve may end up just actually hiking and not only pausing, and I could be completely wrong. And so this is why I don't try to trade or invest, by trying to do guesswork. Of course, I wait for the data to come out and then I move accordingly, right? So, if Tesla, or let's say there is another pause, well, this is going to be very optimistic for the market because the market is still uncertain of whether a pause is going to happen. And so if a pause does happen, well, we could actually see Tesla and very well a lot of other companies continue to run up. And so this is good. However, if we actually get the rate, hike again, well, that could put some uncertainty into the market and put a little bit more fear, especially because we have a headwind of economic data that doesn't look too good, right? And so, from the perspective of someone that invests in Tesla in the long term, I keep it very simple, right? I try not to change it. I'm very bullish on Tesla. I have exposure to Tesla in my long-term portfolio. But if Tesla does happen to fall down, well, I'm going to wait for an area where there's a strong dip and then wait for confirmation of an uptrend again. And that's when I'm going to add more shares of Tesla into my long-term portfolio. I don't always just continue buying shares of Tesla. I wait for these moments where, like Warren Buffett says, when people are and I probably saying the quote, but it's be fearful when people are greedy and be greedy when people are fearful, right? And so, obviously I'm waiting for Tesla. If it does fall down, well, yay. If I have some more cash on the side, I'd be glad to pick up some more shares of Tesla. And that's simply dollar cost averaging. That's what Warren Buffett and so many great investors do because it's proven, right? It's just, you're not even timing the market. You're just, winning by having time in the market, right? And so, obviously, fundamentally, I'm very strong, bullish on Tesla because I showed you guys in previous videos about, the fundamentals for Tesla, looking at PE ratios and earnings per share and how, Tesla is just looking very strong. And, obviously, we're seeing a lot of catalyst events or even other, legacy automakers are joining Tesla, just showing you how strong Tesla is in the EV space. And so that's why, I haven't changed my views on Tesla, in the long term. Even if Cathie Wood has sold, I'm still bullish on Tesla. If there's a major dip, fine, once there's confirmation, I'll add more shares of Tesla. But when it comes to trading, now, I don't want to confuse people. I have exposure to Tesla in my long-term portfolio, but I have a separate account with less money in it, right? Significantly less money that I use for trading. And I trade Tesla in the short term. So if Tesla goes down, well, yeah, I'll short Tesla, I'll buy puts. And if Tesla goes up, well, I'll go long on Tesla, right? And if you guys want to have access to, what stocks I'm looking to trade and, what I'm pretty much doing every single day, make sure to check out the first link in the description below because the first link is going to be a link for the Push and Profit private group. There is a 50% off coupon code for Father's Day that is expiring on, midnight for Father's Day. So definitely take advantage of that coupon code. It's one of the biggest sales we've had this year. But, if you guys want to know what I'm going to be doing for Tesla, definitely check out that link. But like I said, if we have a pause, well, short term, I'm even more bullish on Tesla. But again, if we have actually a hike and there's more uncertainty, well, hey, this may be a good time to short Tesla. As I said, looking into the volume profile, there's a lot of volatility when there's low volume by price. And so we could see Tesla actually come down quickly as well. And so that's why, I'm just moving very data dependent and I'm just waiting to see what ends up happening to see what am I going to do to move accordingly. Now, hopefully you guys like this video. If you're not subscribed, again, make sure to hit that subscribe button and also make sure to watch this next video right over here where I go ahead and further explain volume profile for those of you guys that are interested. With that being said, guys, I'll see you guys on the next video. Take care.